Hey traders, shocking news. Size does matter. But Dennis, what the heck does that have to do with trading? You'll find out in today's session of Trade Your Way to Freedom. I've got to share that with you. It is just bursting out, and I can't wait to share it with you. But you need to watch today's video all the way through the end. Give us a thumbs up. Let us know you like it. Leave a comment, because you're also going to see our review of all 8 stocks that we've recommended for the year so far. They have done amazing. And then the 2 stocks we have for this week are going to blow your doors off, plus everything else we jam into this 20-minute video to help you be a better trader. You ready to go? Remember, size does matter. Here we go. Okay, good afternoon, everybody. This is Dennis Wilborn, the AutoPilot Trader. I want to welcome you to today's session of Trade Your Way to Freedom. In the intro, I basically says, they have lied to us. Size does matter. And today we're going to find out exactly what the heck I'm talking about. And plus, Anil, I've looked, and we've got some shocking results from the stock picks that we've done in June so far, that I'm going to share with people. So you don't want to miss this. Hang in there till the end, because that's when we do show you the great stock picks. And the other thing about the great stock picks, that's where you make your money, folks. That's where you make your money. I shared with you what we had done with the Mara stock, and that was really amazing. But you're going to be really shocked. But just hang in there, watch to the end, and say, whoa. Anil, the basic bottom line is this: we are expert stock pickers. So are you ready to give yourself a medal on that?
Oh, let's see it. Let's see the results.
Okay, well, we'll get there. And so how's the first half of 2023 been for you?
So good, but as I said, not as good as yours. So
okay.
The system more and more.
I am very pleased with how well we've been doing. Some of the things that are coming down the line, if people may be interested in, is that I am honing my skills on being trading futures, the micro mini futures. There's a lot of fun, and I'll be sharing that opportunities with folks in the near future. And I just want to let you know that I don't intermingle my futures trading with my AutoPilot trading because, well, basically bottom line is that, it wouldn't be a fair assessment for how AutoPilot trading is if I intermingled. And so I don't do that. So let's go ahead and jump into today's session. Again, today's focus is on they lied to us. Size does matter. In trading as in life, oftentimes it's the small thing that we do that outweigh the bigger thing. I think Anil and I have both been trading long enough that when I first started trading, Anil, I tried to absorb so much and take on so many, track so many stocks. It was just absolutely mind-boggling and just blew me away. And it was hard to do. It was made trading even harder work than it already is. But I've learned that focusing on the few can bring greater success. How about you when you first got started? I mean, did you have a similar type of situation?
About the same. I kind of zigzagged around Market Smith and then other approaches other than Ken Slim, and back and forth. Then I finally settled on Ken Slim.
Right.
My current method and focusing down, and that way I improved.
Yeah, and it seems like the more I simplify, the easier it gets.
Yep.
And it just really does. And so before we push on into the trading tips for the day, I would like to launch and have everybody just take a really quick look at this poll that I just launched. And it basically says, how have you done so far in 2023? You have multiple choice. You don't have to say how much you're up or how much you're down, but are you up, down, even for the year so far? Please just take a vote. Everybody's either even to up, and so that's absolutely fantastic. Leave the poll open for about 3 seconds more. 1001, 2, and 3. So thanks a lot for participating. what are some of the areas where size matters? And I've been thinking about this and going on with the concept, size matters, but bigger is not better. And in the area of trading, less is more. I was listening to a young man on a YouTube channel. He's a really good trader. In a way, I'm a little bit envious of him, Anil, because he's getting it earlier than I did. He basically, and one of the things he says, hey guys, come and, you can come and learn from me and avoid all the, pitfalls of the landmines, and you don't have to reinvent the wheel. I think the engineer in me actually made learning how to trade harder because I was always after trying to reinvent the wheel. Now, what about yourself?
My thing, one key lesson I learned just recently, I forget the name of the portfolio manager. He was on YouTube, Bill O'Neill's portfolio manager. And he says, if you know your edge and the stock is precisely at that point,
right?
And if you do not act, you're making yourself a greatest disservice. And that was key learning for me. That's happening to me. Sometimes, as I said this before, I take little time before I act. And now I've changed my strategy. If I see it, I'm going to take it and put my stop loss and forget it.
Okay, that's great. Well, here's the question, how do we fix this? And what are some of the things we need to be on the lookout for? One, stop chasing the holy grail is an area. There's people who are system jumpers out there and system jumpers rarely find success. There's typically within the swing trading arena, there's only one or two baseline type systems that you can utilize. However, people get so involved in it, they jump from one, I didn't have success this week, so it's time to go change to a new system, blah, blah, blah. And so limit it. Stick with what you have until you learn it and master it. And, people like Mark Minervini, Mark Douglas all say the same thing. Focus on the few. If you're looking and trying to focus on, I would say more than 20 stocks, you're trying to focus on too many, and you're just going to get yourself in trouble. The trouble you'll get into is by trying to focus on a lot, you wound up not taking action on any. That makes sense? So I suggest, and I streamline AutoPilot trading where we focus on no more than 5 to 10 stocks and our ETFs on a weekly basis. Fewer rules improve the probability, because if you have fewer rules, it improves the probability of actually following them. Fewer hours on the screen limits your exposure to live market. Live markets tend to, if you have a impulsive and compulsive personality, it will tend to feed, I don't know if you call them qualities or I don't know if they're positive or negative qualities, but those things that hamper your ability to trade well. Number 5 is reduce your number of false beliefs. I heard a really great trader this past week, and he was talking about when he got started. Matter of fact, it was Mark Minervini. He got started, and he saw himself trading like behind 6 different screens and all this kind of stuff. And he said that what actually transpired is he woke up to what was really needed. He said his imagination, or what he thought a trader was about and trader was needed to be like and look like and do, was absolutely wrong and didn't lead him to success. And so that's something to also keep your eye on. More doesn't increase the probability of success. So master the few and watch your success explode. And we've been talking about that almost all year long. Anil, what do you think of these 5? There's a bunch more, and I'm sure people could add in, what they're doing too much of. And how about you? Is there one point that you're doing too much of something, Anil?
No, I think they're about the right. That these are the things you have there.
Okay, excellent. Okay, let's go ahead and jump over to, keep a detailed trade journal is one tool for improving your performance. And what that leads into is basically, I'll leave a link, is that my son has developed one of the best-selling trade journals on Amazon. I'll put the link for how to get a hold of those. So traders who journal are more consistent traders, and they tend to be more successful. So if that was something you would like to fit into, clearly this is one opportunity. And if you don't want to use a trade, great trade journal like this, get yourself a spiral notebook. I mean, I traded, I used a spiral notebook for years, and I've got stacks of them where I can go back and look and see what I was doing, let's say 10 years ago. And it's very valuable information because it shows me, am I still struggling with some of the same things? Hopefully not. So, okay, that's what we've got.
Make a quick point about the journal.
Yes, sir.
Now I'm using your journal with the left side of the page. I make my notes, and the right side, I leave it empty until I finish the trade, and then I print out the chart and make my notes on it.
Awesome.
So that's why I'm using the journal. So I'll use up faster, but that'll help me.
And so, no, thank you very much for letting me know about that, because that's one of the things that we designed. That we plan on designing a couple of more, that in one would just be a journal with just pages on it with a little bit of information. So how have we done so far this year? Here's what we did over the last 11 years, and so how are we sitting? We snuck up above the 20% mark, and so we're above where we need to be for the year so far at the end of June. Last week we were at 19%. Right now we're sneaking in about 22%. Still, the NASDAQ is just steamrolling, just moving up so steadily, and now what we need to take a look at, Anil, is let's take a look at our stocks, and then we will save the index analysis for the close. So let's go ahead and look at your stock for today, CMG. They don't have any of these over in Hawaii.
Oh, really?
No. So Chipotle Grill, what's up with that?
No, it's pretty strong in fundamentals with comp 99, accumulation, distribution B minus, up down volume 1.7. It's kind of flat base, and I get a signal on my system, so I said go for it.
Okay. So you're buying right now?
Yes.
Okay, excellent. So yeah, nice little breakout over on the weekly chart, turning back up. So it looks like it this may, if you want to get some kind of an idea of how far Chipotle Grill could run, is take from this low here back in February of this year to that high and extend it from that low. And that'll give you an idea, and you can use your Fibonacci extensions for that, an idea of where this is likely to go. And as you can see, that's probably pretty darn high. We're probably looking at probably over, close to $4,000 on this. Let's do that real quick. Got a couple of minutes. Let's just throw in a Fibonacci here, Anil, to get an idea. So from that low to that high, back to that low, is that 100%? That's 50%. 100% takes us up to $2,683, so almost $3,000. Nice projection up to the upside, so, and something to be very patient with. My stock for the week, Anil, is On and On. So I like On and On. It basically is back in gear, showing us that it is putting in higher lows, higher high, and it's moving on up. I'm looking for it that, it needs to take out that level right there. But on this extension, it's looking probably about 36.52. I would look for a pullback. I'm a pullback trader, as you guys know that. I'd be looking for a pullback back into the 820 or maybe this uptrend line here to move forward with. And so that's where I'd be looking for a potential bounce. It could also bounce off of this level right there. because that is a breakout area. So something I'll pull back into about the, what's that, a $31 level. So what do you think about the ONON? It's got...
looks solid on my system. It's
okay.
Market Smith, it looks excellent. Passes a couple of my toughest screen.
Okay.
It looks good.
And so, yeah, it's got a comp of an 97, accumulation distribution B plus, up down ratio of 1. And so, yeah, it looks really, really good. And so now, drum roll, please. Let's take a look at some of the stocks that we've been looking at. So back at the first of the month, one of the stocks that Anil suggested was Datadog. And I'll give you an idea of where we did it. It was suggested back in this area right here, about the 26th of May. And that was viable at that time. But if you had just watched it, it has also had a couple of really nice runs. And on this most recent run in the month, there's 10% right there. Absolutely awesome. Good pick, Anil. After that was Salesforce. Anil had this one on the 9th, which was right here. What did it do? It pulled back into a level of past support and then did a rebound, 6% there. Or if you stayed on it there, you're up about 4%. Excellent choice. Did you realize that these were doing this, Anil? I don't know how much you're keeping track of them.
Keep a spreadsheet on that so I can.
Okay. Text was suggested on the 16th. Go across here. There's the 16th right there. What did text do? It pulled back in between the 8 and 20-day moving average 4 days after Anil suggested it, and it is up 9% from there. And then the next one is ATKR. ATKR was suggested last week on the 23rd, which is right there. And Anil said it's viable right now. And so let's say you picked it up on Monday at the open. It has run about 9.7%. Folks, those are solid returns. And that's 4 out of 4 that turned out to be really great winners. Anil, super job.
Thank you.
So now, ELF was my pick back on the 25th, approximately, right here. And what happened with ELF is that it gapped up. I was looking for a pullback down to this level here. It didn't. However, about 10 days later, it pulled back to the 20-day moving average. And from that entry, it's up about 15%. Excellent for the patient. And so next, Mara. Now, this was the pure swing trade that I talked about. And this was on the 9th. And the 9th, where are you? Is right there. No, right there. No, right there. And the 9th, we pulled, the next day it pulls back down to the 50-day moving average. I was looking for something a little bit lower, but then it holds the 50-day moving average. And so from this move here up to there, 56%. Not too bad for Mara. And you'll remember the fundamentals on Mara were not that great. This is the 1.5 time leverage ETF on Tesla that was suggested on the 16th. Let's go back to the 16th, which is right there. And what has it done? It rallied up, but then fell back down to the 20-day moving average. Did you see a theme going on there? And from that 20-day moving average, it's up 14.78%. And then last week, we had FTNT. Go back to last week. And again, nice hammer. Could have been bought on Monday. Nice little move up, about 7.3%. So again, Anil, 4 great stocks.
Super job.
And so, yeah. And so that's one of the things I just want to encourage you. You know, if you can't come live to watch, check it out over on the YouTube channel. That's Market Tech Talk, because, you know, these are, Anil and I have been picking stocks together for, gosh, it's been a couple, 2 or 3 years now. And I tracked these results just to say, okay, what could have happened? And again, 8 winners that somebody could have been trading into. So with that, let's go ahead and take a real quick look over at what's going on with the indexes. So what do we have going on the spiders? Spiders have basically broken back up into past resistance. I can go over here, draw a line across this resistance here. Whoops, get rid of that. Equates to, I'm going to go grab this high over here, bring it down to about there. The bottom of that. There we go, right there. There's a level of resistance right there that once it breaks out of that move there, that's where it could run into resistance again. With that in mind, what we're looking at just really quickly is we've got negative divergence, even as we're pushing up, making new highs on the or close to a new high on the spiders. So I will then take a look at the strongest operating stock so far, our ETF. The Qs, similar type story now. You know, as you remember, the NASDAQ just blasted off and blew up through its higher levels there, but today has just moved right back up into past resistance. Take a real quick look over at the NASDAQ itself, just to make sure. Yeah, as you see, yes, it has taken out the high over here from over here, but it's still got a ways before it gets back up into this level over here. That was the highs from 2021. What are we looking at happening with the NASDAQ? Let me do that in a second. There we go. On the Qs, gap up, but not clearing the resistance level right here. Now, if it busts out of this resistance level, all bets are off, and we could go on up and hit the 392 to 400 plus dollar move. However, it hasn't done that yet. We've got negative divergence going on. The Russell's getting a nice move up today, actually showing us a breakout above the downtrend line. However, it is putting in what is called a hanging man, which is a bearish reversal signal on the daily chart, also showing negative divergence. TSI, and look over here on the weekly chart, pressed up into that shooting star, and evening star formation is still valid until we take out that high from right there. That will still remain valid. But look what's overhead. Strong level of resistance where price action, even if we push up into it, that's where we could stall out. So Anil, that's what I'm looking at with right now. It's too late to get in. We didn't really get a great, reversal signal on any of the indexes. And so I'm just standing by. My next move is to kind of look, okay, what happens if it makes it up to here? Or does it fail and drop back down? That's another thing that could happen because we get these kind of moves here, pushed up to a new high, came back, retreated, trying to reclaim this past high. It's close, but it may stall out right there or may push up a little higher. But pay attention to what's going on here with the momentum, and if it's negatively divergent, wait for the reversal signal, and that may give us an opportunity to go get into a downside trade on IWM and or the Qs. So that's what we've got today, Anil. Any comments on the?
No, I think the analysis is right on. And what reminds me, this morning I was listening to IBD Live and a guy named Mike Webster.
Oh, yeah.
He used to be with Marcus Smith for a long time. He was a guest. And one key thing he said, it's what this game is all about is trying to figure out what's normal versus what's abnormal.
Yeah, Mike's pretty abnormal. I know him.
Okay, great. But if we can figure that out, pinpoint the abnormals, then we go a long way.
Excellent. So, okay. Well, that kind of closes us out for today, guys. We've covered a lot. I did want to make sure that I showed you. What are your thoughts on how well our picks did, Anil?
I think we did well, and we need to continue that.
Okay. Well, I agree with that wholeheartedly. And I enjoyed doing, getting that out to folks. And so, okay, just a reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So we're going to close it out for today and just say, hey, 2020, be taking a look over the weekend, folks. Remember, the 4th of July is a holiday. Monday will be a trade day, but it'll probably be very light. So use this weekend to start planning out what is the one or two things you need to work on to become a better trader going into the end of the year. Don't take, again, remember, size matters. Don't take like 10 issues and say, I'm going to solve all these, because guess what? If you have that many things to work at, you're not going to solve them. You got to crunch it down to one thing at a time, or max two things at a time, but focus on what's going to help you to be profitable the fastest. Focus there first. And even if you have to focus on that for all the rest of 2023, and you come out and you're more profitable at the end of the year, that's been a successful year for you. So Anil, aloha. And we'll just say thank you so much.
Thank you.
So aloha, trade well, everybody. Prosper. Mahalo and God bless. We will see you next Friday. And drop me a line. Let me know how you're trading and what you're trading. So thanks, Anil.
Thank you.